YouTube, it's Louis here. I hope you're all well. We're looking at Quant today and there's a lot of explaining to do. I want to elaborate on why I've been telling you guys that $70 was a technical target and actually still is a technical target. I'm getting a lot of people, well, I can't speak for absolutely everyone, so I'm just going to say thank you guys for always supporting the channel. Even if you're disagreeing with the comments, you're still in the comments, you're still supporting the channel. So thank you guys for voicing your opinions. And of course, I'm now explaining to those that are doubting the TA or disagreeing with the TA. I just want to clarify what I meant by the $70 technical target. So we had this head and shoulders pattern. Its technical target is $70. The other reason why you might come to $70 is if you lose this swing low, you will go to this. So if you lose this previous swing high as a swing low, which it is being held as now, you go to the previous one below it, which is this area of support, which is $70. We also had other reasons like this being your low, this is being your high, and we had a 1618 technical target at $70. When you lose this one level here, your target is the 1618. Every single time you get into a trade, when you lose the one, your target is the 1618. Now, that does not mean with 100% guarantee you're going to the 1618 target, and this is what everyone needs to understand. If you're coming to trading for guarantees, this is not the market for you. No market, not stocks, not Forex, whatever. It's not for you because nothing here is 100%. And this is why I actually like crypto over stocks and Forex. I first got into Forex 3 years ago. I was crazy for Forex, but I just noticed that patterns weren't playing out. Then I went to stocks. Oh my gosh, even more manipulated than Forex. And Forex is so manipulated already. And then I came to crypto and I realized, okay, the patterns are actually playing out. The success rate is way higher with patterns playing out, with targets being met, than with Forex. And the worst is stocks. But Forex is so much worse than crypto. And that's why I love crypto. And that's why I came to crypto. Because when I see a 1618, when we break the one, I see a 1618 target. Obviously, I can't say an exact figure, but 8 times, 9 times out of 10, the target will be met. Whereas Forex, maybe 6 times out of 10, and stocks don't even bother. So because of the daily the market closing, you're trapped in your position, the market dumps, your position opens the next day and it's a complete minus. Just stay away from stocks. Obviously, I'm not a financial advisor. I did make money with stocks on crypto mining stocks, but that was like honestly like 2020, end of 2020 I was doing that. So beyond that now. Yeah, you had this one target. If you're looking for guarantees, there's no guarantees. When you lose the one, your target is the 1618. And that's what we need to say. However, you can see here that when we got to the 1.272 and the 1414, you had a bounce. And of course, while we're coming up, we're still below the one. So it would make sense for me to say we're still going to this 1618 $70 target, because as you're coming up back to the one, you could just be retracing to retest it as resistance before continuation to this 1618 target. Okay, when you get above the one, you actually invalidate the 1618 once you confirm it as support. You can see here, once we got above it, you never back tested this area over here support. So if we now come back down to this green line and it holds a support, then I can say with 100% confidence, if this holds support and we start heading back up, then we are no longer going to this 1618 target. But again, guys, as long as you're below this neckline of the head and shoulders, forgetting about the fibs right now, just looking at the head and shoulders pattern, as long as you're below this neckline here, technically you are in a target of $70. So all you were doing potentially is coming up, flipping 150 from support into resistance right now. You can see the daily 55, the double brick wall has held us and it's pushed you into the 20 EMA. Now, two things can happen here. We can obviously hold the 20 EMA for continuation, break the 55, and we would continue this uptrend back up, retracing minimal to $429. And if we can confirm that as support, you would be in a target to the 1618 at $1,182 per quant token. But if we fail to get above this right now, which we are because we're respecting our double brick wall. And if we get pushed below this 20 EMA and confirm it as resistance, technically you should retrace to the last previous low, and that would be down here. But we do have a wick support here, and that's why I'm saying if we can confirm the one as support, the one here, then actually you could start to head higher, break above 150 and this resistance, and we would be retracing to $429. But until we do that, until we break above this, and until we confirm this is support, because we could just straight fall through it and continue, we would be in a technical, and we still are in a technical target to $70. Although at any moment we can start flying up, break above this, I'd say yeah, with a lot of confidence we're no longer going down to that target. But guys, this is why I never want to maintain a bias, and I want to keep your eyes I want to keep your eyes peeled, or make you guys aware that actually we're still in a technical target to the downside, and we actually could still continue to roll over. It just looks like it's a significant breakout, which is very bearish, and you come up very quickly, very harsh, very fast. Just quick, you come down, you go up basically, and now you're being respected as resistance at multiple resistance points, acting as confluence. 3 to in fact, actually 4 in fact. You've got the 200 EMA. As long as you're below this, you should be looking for sales. You're holding the double brick wall, being pushed, trying to get pushed back under the continuation moving average to continue your downtrend. You're also below this psychological level, $150. You're also below the neckline of this head and shoulders pattern, and you're also below a key swing low. And if you lose this swing low, where do you go to? There. If you lose this, you're going to there. So many reasons why technically we're still bearish, even though we were having an amazing bullish pump. What I would say now is that we have to retrace, and the levels that I would be looking at is from this swing low to this swing high here. Out of the first, if this is now an uptrend, right? If this is now an uptrend, well, we obviously have made a higher high above this, still lower highs on the macro scale, but on looking closely, we do have some higher highs and actual higher lows at the moment. But the bigger scale, you can see we're in a mega downtrend. So what I would say though is that most of the time you're going to get pulled towards the golden pocket, the 050 to the 0618, $107 to $150, $15. So I wouldn't be surprised if you get pulled down into this before continuation back up, and you can see that would be a large double bottom with a higher low. You can get 3 types of double bottoms, with an equal low or even a lower low. Okay, so if we hold the golden pocket here, it'd be the higher low one. Now, you don't have to come to this, even though this is the most retraceable zone. Out of a first impulse of a new trend, you can actually just come to the 382, hold it for continuation. So we actually met the 382 over here. So could we actually have bottomed out already? Now, this is what remains to be seen, but most of the time you get pulled towards this. How would I know we're not going down lower? We would need to get back above these EMAs, confirm this previous swing high as support like that, and then continue break the 55. So a lot of work to do, because we know there's a lot of resistance points ahead of us. Now, if we come down to this golden pocket over here, and then obviously we would expect the bounce, but if we come down and lose this and come back down to the 1, you'd be creating that reversal wave to $83. You might not go to the 1, you might come to the 786, get above the 618, but most of the time when you lose the 618, you do end up retracing to the 1, creating that reversal wave. Of course, from here you can do that equal double bottom, which we were just talking about, but a lot of the time you do come down and lose the $83 dollar location, and you come to the 1618, which is actually sitting at $56. So it could get very nasty. But again, we do have multiple targets at the $70. And I want to bring you guys' attention to the fact that actually when Bitcoin lost 39k, let's go to the Bitcoin chart quickly. When Bitcoin lost this 39k area over here, let me get you a technical target. So you're actually in a target to the 1618 down here, 28k basically. But you can see, where did you stop? You stopped on the 1.272, and I noticed this across a lot of cryptos. But as you're coming up here back to the 1, we still have to say, because we're below the 1, we're in a target to 27, 28k. Even if you're coming up, once you get above it and confirm it as support, then we can say, yeah, we're no longer going down here. But at the moment, all you've done is got above it. and then we need to back test it as support. So until we back test it, we may still roll over and lose the 1 and continue to this 1618 target. So this is why I want to show you the quant chart, because the 1.272 is sitting at $70, which is this larger, retracement 1618 technical target, the head and shoulders. So many reasons why this is the target. So looking at the Bitcoin chart, and when Bitcoin came to the 1.270 and bounced above the 1, basically at the moment invalidating the 1618, all the cryptos did that. All the cryptos went to the 1.272 here and then got back above the 1. You can see Quant even did it. So I wouldn't be surprised now if Quant does lose this one, come to the 1.272 at $70, which is actually a technical target still, as long as you're below this, or first of all, this red support as well as the neckline of the head and shoulders. Then yeah, you might even just get a little wick down to here once you lose this low, get above the 1 and then continue up basically. But again, if you lose, if you come back to the 1 and fail to get above it, then we could be rolling down to this new $56 target, the 1618. But at the moment, I'm more focused on $70. How do we invalidate this? We need to either hold this as support, which is actually our technical target, because it's where we're retracing to before continuation. But yeah, it's all about breaking this resistance right now. So thank you guys for watching. I hope you understood it. Please like, subscribe, grow the channel to 2K subscribers by the end of this month, and comment what you think is going to happen next with Quant. Thank you. So guys, these are my crypto packages. Let's bring you over to the one-on-one mentorship, where it's £650 one-off payment. You will get video call lessons with me over a 1-month period. We will do 1 or 2 hour lessons every single day, and you don't need any prior knowledge whatsoever. You can have 0, you can already be an advanced or intermediate trader. My job here is to 10x your learning curve. Everything that I'm teaching you has taken me over 3 years to gather and cost me over £10,000, whether that was good courses, bad courses, mistakes, scams, or whatever it was. It cost me over £10,000 to get all this information that I'm personally teaching you. I also had to pay for my mentor over $2,000 for a 2-hour lesson. So what you're getting for this price is absolutely phenomenal. Now, you also get the 6-hour crypto course included in this price, as well as the signals chat until the top of the bull market. Now let's move over to the signals chat. I wouldn't call it signals. This is just basically a group where I post what I'm personally doing, my thoughts on the market, if I think it's going up or down. So there's daily chart updates, but also, yeah, throughout the day what I'm thinking, or where I'm buying, where I'm selling, where I'm looking to accumulate, or obviously get out the market. This is what's in the crypto chat, and that's £25 for your first month and £40 onwards. Then we can move over to the 6-hour crypto course. There are over 35 plus videos in this. You don't need any prior knowledge to start. You can be beginner, intermediate, or advanced level trader. My job here is to 10x your learning curve, to make you into that self-sufficient trader, to make you into a trader that doesn't need outsiders' help. Not my help, not any YouTubers' help, or any crappy group chat. So if you're interested in this, you also do get a one-on-one mentorship lesson with me at the end of the course, so you can get any questions answered, so you're clear and you know exactly what to do going forward. If you're interested in any of these packages, then please go to my Twitter at Louis_crypto and literally comment down below and just say, Louis, I'm interested, and I'll personally private message you to see if you qualify for any of these packages. Thank you guys for listening, watching the video. Please like, subscribe, comment, and I'll catch you in the next one.